information as that comes. But in the meantime, I want to get to WisdomTree, which posted better than expected second quarter earnings today. Revenue jumping 85% year over year to a record $81.6 million. With more, I'm bringing in CEO Jonathan Steinberg. And we should note, not only is he lucky enough to be the CEO and founder of this company, he is also lucky enough to be married to our very own Maria Bartiromo, host of Mornings with Maria. Jonathan, good to see you. Good to have you here. Congrats. Let's talk about what you're seeing in terms of overall trends with investors right now, because there are a lot of people that have been fatigued by these markets, despite the fact that we keep marching higher. Yeah. And yet you're seeing some positive news there. What would you say your average investor is doing overall?
So investing trends are changing. So we are only ETF oriented, and you're seeing investing styles change. People want to be in transparent, liquid, tax-efficient product, which is what ETFs are. So ETFs are to mutual funds what the internet is to the newspaper. It's a newer technology, and the money is, we're really taking market share from old structures. One
of the benefits, and I've always cited this statistic, is that over a 20-year time period, it's pretty hard to beat an index. If you've got a mutual fund where they're actually choosing everything, and you compare that, say, with just an S&P index fund, it's pretty challenging, and that's because of all the expenses associated with mutual funds.
Right. So now, I didn't touch on price. I talked on the benefits. But yes, and the ETFs tend to be cheaper than the active mutual funds also. So price matters, because the only number that matters to the investor is their after-fee, after-tax return. That's it. And you just got to stay focused on that. And that's why ETFs are taking in so much money. So in the first 6 months of this year, WisdomTree raised $20 billion. Only two companies in America raised more money than WisdomTree, Vanguard and iShares. Everybody else raised money.
How much is the stronger U.S. dollar contributing to your success?
So we have pioneered a type of investing, hedging out the currency on your international equities. And so a strong dollar has really helped us a lot. So we have a fund, HEDJ, takes out the currency, the euro, on European equities. That's been the best asset gatherer year to date in ETFs.
Now, it's kind of neat because, there are people that look at some of these more exotic places that they could invest, say, Greece or something like that. You can go and find an ETF that would mimic what the Greek stock market is doing. I want to get your thoughts. We've been talking a lot about Hillary Clinton, of course, today, given that all these emails are coming out. She was just recently on the campaign trail outlining her platform and her plan for capital gains taxes. Listen to this, Jonathan.
For taxpayers in the top bracket, families earning more than $465,000 a year, any gains from selling stock in the first 2 years would be taxed just like ordinary income.
Okay, so her plan basically is to make everyone hold on to their investments for 6 years. And if you don't hold it for all 6, then guess what? You're going to get slapped with a higher tax rate. What does that do to investment and people's ability to invest?
I think people will invest less. So, in fact, since the financial crisis, the flow of money into investing, all structures, has been very muted. People are not investing with enthusiasm. There's just a lack of trust. If you were to do this and take away one of the elements of trading, which is the actual tradability, the short-term nature of some of your investments, if you take that away, you will just see a substantial decrease in money coming into investing. I think it would be terrible.
You think it would be terrible? I think a lot of people would agree with you. I mean, we need capital coming into our markets right now.
Absolutely.
We need investment. And if you don't have that, you're going to ultimately hurt the economy?
Yes.
I mean, 2.3% GDP growth, not great. We learned today that wages, basically, they aren't going anywhere, and they haven't been going anywhere for quite some time. Is this really a product of Washington?
Now, I mean, this is definitely the populist, movement. But you have to remember, something like 90 to 100 million households are invested in the stock market through pensions, their company 401k plans, and all of that. So it's really not just the very wealthy. This is really everybody working would be punished by this.
Everybody would be affected. Finally, before you go, I want to get your thoughts on something that Bill Gross just said yesterday. And he communicated to me that he really thought that the Fed is actually at this point on the verge of creating a new kind of asset bubble. In other words, the Fed being at zero for 6+ years at this point is doing more harm than good. Your thoughts?
You do want to see free markets. So, you can't really price anything if you don't have a sense of what true value is. And a lot of true value is based on 10-year treasuries, and it's being suppressed. So you'd like to see the markets become much more free again. And so ending some of the QE stimulus would probably be a positive, or raising rates, letting them find a true floor or a true market level would be constructive for all investors.
Jonathan, great to see you again.
Thank you.
Great to have you here, and congrats on the quarter. All right.